Hey everybody, Steve Ferguson here, your modern mortgage loan advisor. Today we're going to continue with the Mortgage 101 series, and I'm going to explain to you guys today what happens when your loan is submitted to underwriting. So we've gotten past the disclosures, you signed all those documents. Now your lender, and in this case I'm going to assume us as the lender, are going to gather all of your documents, make sure that it fits the program guidelines. We're going to package those up and send them to the lender. It could be an in-house lender, like in our case, it could be another bank of some sort, but regardless, all those documents are provided to the final lender for them to review and determine whether or not A, it fits the guidelines that have been set in place, B, do they have any questions on what's been provided, or C, is more clarity necessary. That's called the underwriting process. So an actual underwriter, which is an individual person that's been certified to underwrite loans, will go through all the documentation that's been provided in order to make sure that they check each piece. Now they're going to go through and verify things. So for example, if you need $10,000 for closing costs, they're going to want bank statements. Now there's certain rules and guidelines that are attached to each individual program. So for example, FHA has different rules than conventional. So based on the rules of those programs, we as your loan officer are going to submit exactly what's necessary to check the box for that program. The underwriter is going to take that information and confirm it. Now, the underwriter's job is to pick through it with a fine-tooth comb and verify certain things. So let's just talk about bank statements first. Like I mentioned a minute ago, they're going to look at 2 months of bank statements, which is pretty standard. They're going to look at your deposits. They're going to look at your outgoing. They're going to make sure there's nothing that's unusual because there's rules that are associated with cash deposits or super large deposits or deposits where they don't know where they're coming from. And we have to address all of those things. So once the file has been underwritten, the underwriter may have specific questions about what those deposits happen to mean. And if that's the case, then what we've got to do is make sure that we address those things throughout the underwriting process and explain to them what it is and what's going on in your bank statements. So that way the underwriter can make sure that it still fits the guidelines. Now, there's stages in the underwriting process. So stage 1 is they review the initial package to make sure that it fits. Then they'll send us what's called a conditional approval. So assuming everything looks reasonably good to give you a conditional approval, they're going to say, hey, I'm willing to approve this loan subject to these conditions. And those conditions can be anything. It could be a title company, updating the mortgagee clause. It could be, hey, we need an appraisal. It could be, hey, I need you to clarify some of these deposits, or hey, the income is different based on what I'm calculating versus what you guys put into the file. So then we get that approval back, we go through the conditions, and then we determine how we can meet each of those conditions. And if there's conditions that are very black and white, easy to meet, we provide that information back to the underwriter to get those conditions cleared. If there's gray on those conditions, then we have to go back through and have a conversation with the underwriter to see if we can make it fit the box of underwriting. That's part of being a good loan officer and having a great loan officer team. The challenge you run into is when you're working with a mortgage company, as an example, that doesn't have the experience, doesn't have the background to argue some of those things that may come up, then your file gets declined when in reality it should have been approved. So knowledge is really important in this process. You've got to make sure you're working with the right group of people, with the right lender, and you want to make sure that they know what they're talking about. Now, some common reasons that you may see loan delays or denials. A delay would be, hey, you know what, the income's way lower now than what we anticipated it being. The underwriter calculated the income differently because maybe you had overtime or you had commission income or you're self-employed. And so we have to go back in there and repackage those kinds of things or create an option B. So for example, if our original goal was to go for this loan product and now everything that we have, because it's been reviewed, is outside of that loan product, we have to shift to another loan product that will allow for it. So that can take time. But the important thing is now you have options. You're not stuck in a denial state because we understand how to rework a file and get you where you want to go. Now, a delay could be, hey, you know what? There was a deposit in your bank account for $20,000, which is very different than your normal $5,000 deposit. Where did that money come from? And you have to document those things. So for example, if it's a gift from a family member, we have to go back to your family member and document the gift. How they gave it to you, when they gave it to you, did they have the funds to give to you, etc. Now, all these things are based on federal laws and statutes that each program requires. So I don't want you to think as a lender, we're making these conditions up. I promise you we're not. It's just part of the underwriting process to make sure that it fits the federal guidelines or the program guidelines that are necessary to get you that mortgage loan. Now, when we go through all those pieces and we're looking at that, there's no way for me to give you a list of everything that could come up or that will come up or that may modify your loan program. Everybody is individually specific. And that's why mortgage lending is a little bit complicated. Our goal is to make it as easy on you as possible. We've done this for a long time. And when we analyze your documentation, we're going to have a really good idea of what needs to be done in order to get you across the finish line. So important information, again, make sure you have a knowledgeable loan officer. How long does underwriting take? Let's answer that question. It depends. Some underwriting is very quick. If it's a very vanilla loan, conventional, there's ways to underwrite conventional in a day or less. It can be very fast. Whereas when you get to some outlying programs, some of the non-QM products, like a no ratio, asset depletion, et cetera, they can take longer because it's more of a manualized process. So if we can't use an automated approval or a technology system to underwrite your file, that means it's up to underwriter discretion as to whether or not they approve your file. Now, important notes about that when your file is submitted to underwriting is if it's a manual underwrite, which means the underwriter has to physically go through each piece and they have to sign their name to each item that they're clearing, the underwriter is essentially guaranteeing that mortgage loan is viable, it fits the guidelines, and they're putting their signature on the fact that you should be able to make your payments and move on. When you have that situation, it takes longer for an underwriter to review the file because they're putting their name on the line. So they want to make sure that it's good and correct, and they may ask for more information than you thought you were going to have to provide. If it's an automated approval, which is a technology piece that spits out this approval and says, as long as you meet these guidelines, we're good, an underwriter doesn't have to sign their name to it the same way. It doesn't affect them near as much, and it's very straightforward. So that can definitely influence how much time it takes in underwriting. So the important information on this video is just to understand that it's a process. There's a reason the process is there. Our job is to set you up for success and give you ideas about what could or could not happen. And then as soon as it comes out of underwriting, we're going to give you a call, go over that information, let you know where we stand, and let you know if we have any concerns. We'll also send you a list of any items that we're going to need in order to fully clear your underwriting process and get you ready for closing. All right, guys. Well, I hope this was helpful. Don't forget to like or subscribe. Check out the rest of my Mortgage 101 videos, and I hope you have a great day. Bye-bye.